A lot of people that I talk to each week, one thing that's pretty important to them is they want to pay the least amount of tax possible over their lifetime. And there's a bunch of different strategies to do this. Some are better than others based on individual situations, but there's one strategy that you don't hear about too often, but it could be worth exploring. Not doing it could end up causing you or your family to pay more tax than what's required. Don't get me wrong, because paying tax is important. It's just a part of living in this country, but we probably don't feel the urge to have to tip Uncle Sam, unless you really want to do that, which is fine too. But in this video, we're going to go over one strategy to potentially lower how much tax you're paying so that you can see if it might make sense for you. But first, welcome back, or if I haven't met you yet, I'm Dave Zoller and I run Streamline Financial with Tim and Luke and Sean, and we're a retirement planning firm, and we've helped a lot of people retire, but we can only work with a select number of clients ongoing, helping implementing these tax and investment strategies and withdrawal strategies. So we created this channel to hopefully share some of those same strategies with you. So here's an example of how this less used tax strategy ended up saving a client of ours $50K in taxes. About 7 years ago, we had a 20-minute phone call with a 60-year-old client, and she asked if we could also review her mom's tax return and also her investment allocation after tax season. The mom was working with a different advisor, but our client just wanted to get a second opinion on it. We typically do the tax planning meetings after tax season in the summer months, and that's really part of the proactive planning service that we offer clients. But what we found is that our client's mom was taking required minimum distributions of about $30K per year, and she also had a lot of write-offs due to high medical expenses, and also she was giving charitably, which really lowered her taxable income. And these expenses that she had, because she was in an assisted living facility, they actually lowered her taxes to zero. So we did a tax projection for her, for the mom, and we realized that she could take out another $40K out of her IRA and still pay zero tax each year. Mom didn't need the money, and one of her goals was to really pass on some of her assets to her daughter, our client. And when we looked at the client's tax projections, our client's tax projections over the next few years, what we found out is that if she was to inherit this money, then she would be paying quite a bit more tax on the money that she inherited. And we realized that she would be forced to take out of the IRA that she inherited, and she'd be forced to take distributions out each year. So we shared the info with our client and with her mom, and we showed them this zero tax strategy, and then we showed them the pay more tax strategy, and it didn't take long to come to a conclusion on what they wanted to do. And I'll detail it a little bit more coming up. Here's what we did to really solve this for them. The mom started to increase what she was taking out of the IRA, and it just went to another account of the mom. So the individual IRA, her IRA, just took a distribution. She paid zero tax on it. It went to another account and it stayed invested. Neither of them, mom or daughter, needed the money right away, but it was still there in case the mom needed it for medical expenses or really anything that came up. And then when mom passed away a few years later, she had taken out total an additional over $200K from her IRA that she paid zero tax on. If this money stayed in the IRA and her daughter inherited it, then she would have had to pay another $50K in taxes because she would be forced to take out money each year for the next 10 years, at least from that inherited IRA. There's a few rules around that, but you got to take out all the money now from IRAs within 10 years. So the tax strategy here is it may be beneficial to think about multi-generational planning, really you and your mom, or maybe your kids. You don't need to be a uber wealthy person to really get the benefit of doing this, just like this scenario that I mentioned. So if you're already helping your parents with financial things, or you think that they might be open to it, maybe have the conversation, or at least show them this video. Share this video to see if it starts to get wheels turning on what might be possible. Once you start involving the family in some of these planning techniques, it can really open up more options. And by the way, if you've got elderly parents and you might be the one in charge of organizing things for them as they get older or after they pass away, we've heard frequently from clients how labor intensive and how just time intensive it is for them to have to organize the financial affairs after a parent passes away. And there's enough to already be processing and dealing with during that time. And this is just one more thing, added on to their shoulders. So one helpful tip is to just make sure that you have that your parents have everything in one place, really one place to go with all the important information for them. To help our clients, I'm putting together a workbook for them that can be used to really gather all the important info, such as financial affairs and legal matters, or important contacts, or health instructions, and where to find important documents, so that it can be filled out and then just stored in a secure place so you know where to go. If you'd like that, or either for your elderly parents, or if you're thinking about it for your own kids, look at the family planner in the link below. So back to the main takeaway. Tax planning for the upcoming year and beyond is really important. And then there could be a real benefit to this family tax and estate planning idea. One small change or implementation of a strategy could really mean quite a bit of savings. So hopefully that story was helpful as you're thinking about your own finances, or maybe your parents' finances. If it was, please like this video and subscribe, and then I'll see you in the next one. Take care.